Investing 101 today is all about ETFs. Joining us now for that is Allison Bonds, head of private and independent wealth management at State Street Global Partners, here with expert tips. State Street launched the popular SPYDER ETF that tracks the S&P 500. Good to have you here, Allison, and hard to believe this is the 30th anniversary of the launch of that ETF. ETFs are basically a bundle of assets trading at the same time. Why is that better than trading, say, a single stock or bond?
Sure. Well, ETFs are, I like to think of them as bringing the best of both worlds, the best of mutual funds, the best of stocks. So they're similar to a mutual fund in that they're a basket of securities. They tend to be diversified like a mutual fund, but they trade on a stock exchange just like a single stock. So I like to think of them by breaking down the E, the T, and the F. The E standing for efficiency. They tend to be more cost efficient than mutual funds. They also tend to be more tax efficient than mutual funds, meaning that they rarely pay a capital gain. The T stands for transparency. So you can see all of the ETF's holdings at any time on the issuer's website. And then the F stands for flexibility. And that means that you can trade throughout the day. And that really helps you respond more quickly to market movement.
Why do you think ETFs have become so popular?
Well, I think they've caught on over the last few years for a number of reasons. First of all, as you know, Angie, we're celebrating the 30th anniversary of the launch of the very first exchange-traded fund in the U.S., SPY, the ticker SPY. And that's now grown to be the largest in the world. And SPY really revolutionized and in some ways democratized the way that people invest. And what I mean by that is that it doesn't matter how big of an investor you are. My great Aunt Mel in Cincinnati, Ohio, can access the same investment strategies as Warren Buffett, for example, with an ETF at the same price. And we think they've become so popular recently because last year taught us that it's very hard to pick individual securities. We saw everything from blue chips to tech stocks being down. And then we also have recently learned how hard it is for investors to pick mutual funds that outperform their index. It's hard to do that in any given year, much less over the longer term consistently.
You took a study of investors and you learned that some tell you ETFs are a better way to ride out the volatility in the stock market. What else are you learning?
Well, I think what we found, it's interesting that you bring it up because last year at the end of the year, we conducted a global ETF impact survey, really to figure out how investors were thinking about the market, knowing how tumultuous 2022 was. As you know, Angie, it was only the third year ever that both stocks and bonds were down at the same time. And what that survey showed at the end of last year was that even with all of the market volatility, investors told us that they felt that ETFs made them a better investor. Over 60% said that ETFs have improved the overall performance of their portfolio. And, sort of beg the question, well, why would that be? And in the survey, investors indicated that they really valued the diversification that ETFs provide them. And maybe more importantly, the liquidity that ETFs give them. And that liquidity enables them, again, to buy and sell at any time throughout the day and really respond more quickly when the market is moving quickly. And I think we know how important that is today.
What are some helpful tips in choosing a fund that's right for an investor?
Yeah, I think what we would recommend is to know your objective when you're buying an ETF. There are today more than 8,000 ETFs, which is wonderful, but at the same time, that can be overwhelming. So you really want to do your homework. You want to know what you own, know what the underlying exposure is, look at the expense ratios, know what you're paying, look for low-cost ETFs, and then perhaps consider working with a financial advisor. Many advisors will meet with you at no cost to discuss your objectives.
Wonderful to have you here. Thank you so much for your time today.
Thank you.
Go to businessfirstam.com for where to see our show on TV.